David, of course, big news last week, towards the end of last week, was that G20 meeting. But as we enter the new week, it looks like nothing concrete really coming out of that meeting, and it's really status quo the same as it was.
Hi, Stephen. Yeah, I must admit we're not surprised by the lack of progress made by the G20. There's very little that can be said or done. That they're very cognizant. They don't want to unsettle markets, but there's still a lot of self-interest around, and many issues floating around from the US the QE2 to the debt problems in peripheral Europe. So very not very surprising that they haven't said anything that would catch the market off guard.
And it really seems to be Ireland's debt problems that are plaguing currency markets as we head into the new week. We've got the euro trading just above 136 against the dollar, the rand back at that £7 mark against the dollar.
Yeah, Ireland causing all the problems. Of course, they're not alone. They're joined this morning by Portugal. Greece remains an issue, Spain as well. So all those peripheral European countries are causing issues and heightened awareness about the global debt at this point in time.
And of course, there's no certainty whether Ireland is going to ask for a bailout from the European Union. In fact, towards the end of last week, it looked like they didn't want a bailout and said they didn't need one, but they haven't ruled out the possibility of that. Do we really just need to see the certainty of whether they will go to the EU for money?
Yeah, I think they'll probably be forced to, Stephen. We saw a report this morning that perhaps they'll go not as a sovereign state, but they'll go to get some funding for the banks. Because, of course, a large part of their budget deficit right now is going towards funding the banks as property has collapsed in Ireland, and the government has been forced to step in to help the banks shore up their balance sheets. So there's a lot of conjecture, a lot of rumour, and in fact Friday was a very volatile day based on all those rumours and counter rumours, and market really taking a wait-and-see attitude now as to what exactly Ireland is going to do. I think if they don't get a bailout package in this week, or if they don't ask for one, we'll certainly see those European spreads moving back out again, and that will have an impact on the euro and, of course, an indirect impact on the rand as well.
Of course, more news, or rather speculation, that was out on Friday was that China might be forced to raise interest rates again due to its inflation ticking up, and the economy still appearing pretty strong. And of course, that could curb appetite for commodities, and that really causing some concern in the markets.
Well, we did see commodities come off quite heavily over the weekend between Friday and today, both from precious metals perspective, both from a soft commodity perspective. Gold down all close to $40 at one stage. The silver price fell 7%. And that's all heightened, by China perhaps raising rates or imposing some kind of lending criteria that will make it harder for banks to lend. And all of these issues really playing itself out in great market uncertainty at the moment. And we've seen the impact on the rand at the moment as it moves towards 7.
Do you think this is an overreaction, though, David? Because, first of all, the Chinese economy is growing pretty strongly still, and these curbs are really aimed at the property sector at this stage, so we could still feasibly see that strong commodity demand coming through.
Stephen, every so often we have this heightened concern around global debt, and it's really about the developed nation. So yes, China is doing very well, and Asia is doing particularly well at this point in time, but the world is mired in debt, and we just don't seem to get any solutions. We're adding to that problem. Alan Greenspan warned on the weekend about a possible bond crisis originating in the US if they don't do something about their budget deficit. We've seen the issues of Southern Europe at this point in time. So every now and again, these concerns around global debt do arise, and I don't think they're unjustified. I don't think we're seeing a reaction that the reaction is expected. I think this uncertainty creates a lot of tension, and certainly a lot of players will be looking at equity evaluations and seeing, well, if the governments around the world can't stimulate the economies further with further government spending and higher debt, that certainly will have implications for growth down the road, and a lot of players taking the time out to assess what that impact may be.
Of course, that G20 meeting really leaving the door open for emerging market countries like South Africa, like Brazil and Thailand, to take steps to try and curb some of the strength in their currencies. And of course, we've already had our National Treasury saying that they don't favour a Tobin tax or a tax on capital inflows. So really throwing the ball into the Reserve Bank's court. And of course, we've got that MPC coming up Wednesday and Thursday. How do you think the MPC is going to react?
Stephen, my overall assessment of the domestic situation at the moment, there's no real reason why the central bank cannot cut rates. But I'm very cognizant of the fact that as we move into record low territory, it might be a much smaller than expected cut, perhaps 25 basis points. Certainly, we're well in the lower single digits at this point in time as far as rates are concerned, and it may be prudent to move towards smaller incremental move away from 50 basis points to 25 basis points. There's no real reason why the Reserve Bank can't cut rates. Inflation remains low, the rand is very, very strong. But I think it'll be very dangerous to attach any kind of monetary policy to trying to curb the rand strength. You know, that monetary policy has to take many, many factors into account, and the rand is just one of those factors. And of course, we did have the government, the finance minister, saying last week that they will give the Reserve Bank money to help them intervene in the currency to curb the strength. So certainly that policy is on the cards at this point in time, and we'll just have to wait and see how it plays itself out.
Do you think then if it was a 25 basis point cut, that would be more symbolic than anything else, David?
Yeah, I think so, Stephen. The economy is not doing great at this point in time. Unemployment is a huge problem and will remain so for a long period of time to come. And these things have to be managed, but on the other hand, we have to be cognizant of the impressions that we leave to global investors. We can't do knee-jerk reactions, and I think it's going to be a very, very difficult pathway ahead for the MPC and Jill Marcus in particular as to how they manage the economy, how they manage the rate scenario. But certainly, from my perspective, there's no real reason why we can't see a small cut.